Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade Newsletter. Hope you guys are doing good. Great trading week as far as swing trading is concerned. Had a pretty nice week here in the newsletter, and hope you guys are also doing well. Glad to hear a lot of the results. I've got a lot of emails and a lot of messages, and people sending account statements and all of that from following the newsletter. So I'm super happy to see that. It makes me really happy, and I'm glad that you guys are seeing success too. Um, let's just dive straight into another edition of this newsletter. So where are the markets now? Markets, I mean, continue higher, right? It's basically like every time we do the newsletter, markets always up, and that's the case here again. Markets back up into all-time high territory, and no sort of news is really causing issues with the market. There were a few days where coronavirus issue was causing the market to gap down, as you can see here. On this day when the market gapped down, on the following day market gapped down, and on this day here on Thursday market gapped down as well, right? Because of the coronavirus issue. And but after gapping down, markets fail to hold that low. If I go to the 15-minute chart, you will see here on this day, right, that the market gapped down, right over here, opened lower for the day, and then continued making all-time high. Right? On the next day, we opened lower again, and then again continued all-time high. So the market just loves to keep going higher. No sort of news is able to knock this market down, and there's a lot of buying that is coming in. And there might be more, like even though markets at an extended level, everybody's calling for the market pullback. I'm not in one of those boats, like how people will make claims like market's going forever up, right? Or some people say, oh, the market's up too much, it's gonna crash. Like, yes, it might. It doesn't matter, right? Does it really matter? Because we're swing trading, right? So when we're swing trading, we're trading swings. We're not really holding on to stocks for like years or months. We're like taking a swing. We get in, it pops, we get out, right? We trading swings. That's what swing trading is. You trade that swing. So when we're trading that swing and we're doing like a mix of longs and shorts, doesn't really matter what the market really does. So I don't really pay attention too much to the market. All I pay attention is that when the market is close to the 9 and the 21 EMA, I want to be looking mostly long swing trades. When the market gets too extended above those moving averages, I want to add some shorts to my portfolio, right? And at the same time, when market breaks below the 21 EMA, I start looking for shorts. So, that's what swing trading is. You got to be nimble. You got to have rules. And personally for me, just as a learning lesson for you guys, this is what I do, right? And you guys probably seen that since I did the newsletter, is that when the market was over here, I was pretty much always only long, right? When the market got too much extended, I started doing some short positions, right? Just started adding a bunch of shorts. And then when the market was breaking below the moving average, I pretty much only had shorts. When the market got back and reclaimed those moving averages, started going long again. And that's what I've been doing. I'm started going long again. But I said, you know what? I want to add one or two shorts to my portfolio because we're kind of up there, And then we did the CHRW short. Now I have one more short that we'll see for this newsletter. So that's kind of my rules as far as market. All right. So that's basically it. As far as where we're headed right now, I mean, I would say the same thing I'd said in the last edition of the newsletter, where we clearly are extended, and we are extended. But as I talked about in the previous edition, right, when I did the last newsletter last weekend, I talked about it, right, that we were extended. But then that little dip here kind of sorted it out for a little bit, and then we can probably go back up again, and that's exactly what's happening. We're going back up again, and I personally think that the market, really doesn't have much issues going into 339, 340 on the spider. Currently, we're trading around 337, so I think the market does have a couple more points of upside, and then once the spiders start hitting that 339, 340 level, that's when I will start probably getting a little bit concerned on the long side and maybe start looking more shorts. But here's the thing, right? If the market is going straight up, a lot of the shorts aren't really going to do it, right? Think about it. Market's going higher. The longs are going to start to work, but the shorts aren't really going to work because the market's eventually going to pull it back up. So that's the thing, with looking at shorts this market. So I like to pay attention to the market. And we've been doing pretty good so far. I mean, if so far for the year, we're up 12.17R for the year. Even if you take slippage and stuff, I mean, let's say we're up 12R for the year, right? So at a 1% R unit, you would have made about 12%. And if you're risking 2%, then we're up almost like 24% for the year, which is great. And that's actually we're pretty much exceeded last year's return, right? Last year we closed the newsletter around 15 hours. So Jared closed the newsletter last year at 15 hours, and this year we're already at 12 hours, and it's only February. So I think this could actually, in my opinion, this is shaping out to be a phenomenal year. Right, we'll see how it goes. It's always too soon to speak too soon because hey, we got 2 great months. We could also get 2 bad months. You never know. I hope not. Right, I doubt it. I hope not. But it's anything's possible. But the good news is that we've achieved those return, and I'm gonna keep going. And I think this could be one of the record years, similar to when I used to do the newsletter in 2015 and 16, and even 17. We had triple-digit returns for a lot of a lot of the times, and I think this year might be one of the, another one of those years, and I want to keep it going. So again, super happy to see your guys' emails and stuff. Really makes me happy that some of you guys are able to get onto some of the trades. Some people also voiced their concern about like they have a job or they're working during the day and all sorts of things like hey, I'm at work in the morning, so sometimes when I send out an alert during the day, they don't see it in time or they can't follow it in time, and that's reasonable, right? That's a reasonable concern to have, and I understand your concern, and we'll see, maybe in the future I will try to divide the spreadsheet into two, right? One which is active swing trading, which is basically what I'm doing, which is what we're doing so far, and maybe I'll set up a set it and forget it type of strategy where I just say, hey, here's the entry. If you're a passive trader, you have a job during the day, you can't trade, then here's what you do, right? So then those guys don't get the I guess mid alerts. But personally, my goal with the newsletter has always been to share what I'm doing, right, in my own account, because that's what I feel is the right thing to do. Is hey, here's what I'm doing in my own account. Here's an email, right? This is what I'm doing, so that not only you guys can learn and see what I'm doing and why I'm doing it, and more importantly, if you have time, you'll be able to follow along and get the same results, right? So personally, I'm only going to be doing what I have been doing, right? I'm not going to obviously change my trading just because some people, can't be in front of the computer. That's too bad, right? But I can't change my trading for anybody because guess what? I make way more money trading than I do all of this, this stuff. So that's that. Newsletter is going to continue to be as it is. I'm not really making any changes, although I always appreciate feedback and I always appreciate suggestions, right? Like, hey, can you tweak the spreadsheet in this way or that way? Great, I'll do that, right? So anything I can do to make it easier for you to follow along, let me know, right? But the format of the newsletter isn't really going to change. I'm not going to change it because this is how I trade, and I'm not going to change my trading for anybody, right? So I will continue to tell you what I'm doing, but I do want to get some feedback on how I can make it easier for you guys to follow along. So if there's anything I need to do as far as sending you less emails, more emails, tweak the spreadsheet in a way, or set up some sort of system, that I'm open to and that I'm willing to do, right? But I'm obviously not going to change my trading for anybody. And also some people voiced concerns about, there's one or two stocks in the newsletter like, I don't know, IHC, too thin, low volume, right? My question to you is how many shares are you trading of that thing, right? I mean, I'm trading $1,000 risk, right? I'm trading a heck of a lot of money, right, on every single trade. Even then, I only took 600 shares of IHC. So my guess is most of you guys are risking maybe $50, $100, $200, $300. So you're really taking less than 100 shares of IHC. So even if that stock is too thin, right, even if it is too thin, low volume, your 50 shares aren't really going to impact that stock. Your 100 shares aren't going to move that stock. Heck, my 600 shares won't move that stock. So, it's not something to be concerned about. Again, I did kind of, go over and I thought about, what, maybe I should not call this for the newsletter because I don't know, there's over like 1,000 people subscribed to this newsletter. So, maybe I should not call these thin trades for the newsletter because, if everybody's buying it, yes, it will move that stock, right? So that's not what I want to do. But at the same time, it's a dilemma where, my goal is to share everything that I'm doing. So even if I don't call IHC or any trade similar to that in the newsletter, I'm still going to be trading him in my own account. As I said, I'm not trading my trading for anybody. You know what I mean? So I'm still going to be trading it. That's my dilemma. Should I let you guys know and you guys make your own decision? Hey, this is too thin. I don't want to trade it. Right? Or should I just not call these and just do them for myself in my own account and not tell anybody? So that's up to you guys. Drop me an email. Let me know what you guys think. So that's that. Another question I got was there was a stock, this one LQMT, that I had called. It never triggered for us, but I called that stock. People are like, oh, this is a 10-cent stock. Why are we trading stuff like that? I'm like, doesn't matter, right? This is the thing about R units and PTS. Whether we trade a 1-cent stock or whether we trade $1 million stock, whether we trade $1,000 stock, whether we trade a $500 stock, whether we trade a $10 stock, it doesn't matter. So please get this out of your thick skulls, right? It doesn't matter what the price of the stock you're trading is, because we are trading based on R units, right? R units. So every trade that we lose on is minus 1R. So whether this is a $100 stock or a $1,000 stock or a 1 cent or 10-cent stock, when it stops out, you're gonna lose minus 1R, right? So if your risk unit is $100, doesn't matter what the price of the stock is. When it stops, you're gonna lose $100. So please get this out of your head that you're limited to the price of the stock. You're not. You can trade as many stocks as you want. Just you adjust your share size accordingly. Okay, so that's that. And again, so that's my opinion. All right. So now that that's being said, let's take a look at the Nasdaq real quick. Nasdaq again continuing to make all-time highs. Actually, this is much stronger than the spiders, right? Much stronger than the S&P 500, and that's because the technology sector is in the Nasdaq, and technology has been really, really hot, continues to remain strong. And the reason that the spiders are perhaps maybe a little bit weaker than the Qs is because spider has a lot of energy stocks, and oil is not really able to get a bounce. So you can see here oil has been continuing to slide down, and people expected that after this decline you might get a nice bounce. We haven't got that, right? Continue to go down. We get a shallow bounce last week. We'll see how far that goes, but that's one of the things to keep an eye on. And that bounce in oil obviously happened because the dollar is straight up, and the dollar looks to be that it might want to kind of consolidate a little bit, but eventually even the dollar looks like it wants to go higher, because dollar, if you see here, there was a little trend line here on the dollar, and you seem to be broke on that. So this is going to be the key area to keep an eye on the US dollar, that if the dollar pulls back here and goes higher, we could go higher, much, much higher, right? But if you start pulling back below that trend line, then the dollar might start pulling back. And that will obviously, as I said, impact commodities like gold. Gold, in fact, here looks like it wants to continue to go higher and make all-time highs, which is, in fact, a concern for the market, because that means people are being concerned, because if people are putting money into stuff like the gold, the bonds, right, that shows that people are starting to become more risk averse, because when people like to grow their money, they like to take risks, they put their money in stocks, right? When people put their money in things like gold and bonds, that shows that people are becoming risk averse. So, when people are getting concerned, it's called flight to safety. So when they're putting their money into safer stuff like gold and bonds that, might not appreciate, but they won't really go down in value that much, right? That shows that there's people are starting to be concerned, and the gold's looking bullish, which actually looks like it wants to go higher again on the GLD, which doesn't really look that good for stocks. Taking a look at the bonds, TLT, and you can see here, this is actually a trade that we did in the newsletter a while ago, when we bought the breakout on this wedge pattern on the bonds. We bought the breakout over here, right? And we took our profits right over there. And now it's actually looking pretty good again, right? It's consolidating. So in my opinion, if TLT, the bonds, get back above 146, right, with a stop loss around 142, you could probably get over 150 as a target on the bond. So I actually genuinely kind of like this play. I'm not going to be doing it just yet, but I do like to play. Those of you who trade ETFs, if keep an eye on TLT over 156 with a stop under 142, and then look for 150, 155 as a target for the TLT. All right, so that's obviously interesting. Let's take a look at IWM Russell ETF. So you can see here, this is another point of concern for the markets. You look at IWM, that's the ETF for Russell sector, and Russell has been, way weaker, much weaker than spiders on Qs. Because you take a look, Qs and spiders are heading and making new highs pretty much every single day. IWM has actually not made a new high since like January, right? The last time it made a high was 17th Jan, and since then, in a month's time, it hasn't even been able to break above that. So it's weaker than spiders and Qs, which shows what? Again, IWM mainly comprises and consists of small cap stocks, right? Smaller market cap stocks, smaller companies. So when the smaller companies, people are not putting money into it, again, ask yourself the question, what does that tell you? Same thing, right? Same thing. That people are now becoming risk averse. They don't really want to take too much risk right now, because if people were confident in the market going higher, they were confident in taking risks, they would put their money in speculative small cap stocks. So the fact that they're not doing it, right, shows what? They are becoming risk averse. They want to put their money into safer stuff like, Microsoft, Apple, like, the blue chip company. They're not putting money in small caps. And that's why QQQ, NASDAQ, S&P are making new highs and IWM is not. So again, that's another point of concern for the markets overall. But again, as swing traders, we are trading the swings. So it doesn't really make too much of a difference because, we're not holding stocks for like years or months. We're holding them for a few days to a few weeks. So it doesn't really make a difference. So, all right. So let's kind of quickly go over last week's closed trade. Some awesome trades last week. Hope you guys were able to participate in that. So this is one trade I called in the newsletter, NBEV, long over $2.06. And our target, we got 2-1 on this one. We got out at 242. So, that was a great exit. Literally in one day, we pretty much hit the target, which was awesome. Again, this was a phase 1 into phase 2 transition breakout. If you don't know that setup, it's in the PTS course. It's a phase 1 to phase 2 transition breakout. That's actually my speciality. That's what I specialize in these patterns. And I would say 80% of the trades in the newsletter are this pattern. So, you might want to learn that. I'm actually thinking, and again, let me know what you guys think. I'm actually thinking of putting together a swing trading course. Maybe we'll do it live and just record it as well. So I'm thinking of doing like a 1-day course on swing trading where I'll kind of go over how I scan for these trades, how I find these trades, and what criteria I'm looking for, and all that good stuff. And just a 1-day class. I think it'll be, I don't know, maybe 3-hour, 4-hour, 5-hour long class. And then I will record it as well. So let me know if you'd be interested in something like that. And I'll think about it. I'm not sure. Please don't hold me to it. I'm not sure if I want to do it. It takes too much time preparing slides. I'd rather just trade. But I'll work on it if some people are interested. If you do it, it'll probably be, I don't know, around $497, something like that. So if you're interested, drop me an email, and then I'll see if I want to do it. But that's the NBEV trade. That was an awesome trade for us. We got 2-1 on that. Another trade which were looking really good for us but didn't do it is UFPI. So this is a stock we got into this long at $50.56. And literally, as soon as it triggered that day, it did really well. From $50.56, it went all the way to $52.09. Was looking really good, and I thought, okay, wow, this is great. And usually I take my profits really quickly on swing trades, but on this one I say, it looks good. I don't want to do it. Next day, it didn't have any volume at all, and just I don't know, just kept coming all the way back down. There's just no buyers for this thing, so I had raised my stop loss to under the entry candle's low to 49.56, and it took me out of the trade on Friday, which is okay because we couldn't really hold on to it too long anyway. Because you see here on 19th Feb, it has earnings. It's reporting earnings. I don't hold stocks through earnings, right? So we had to get out of this anyway. It would have been nice to get out at least for some profit, but in the end, it didn't really matter. We didn't lose much on it. So that was a small loss that we got out of. Open trade for us right now, we have open trade CHRW. I shorted this stock at $72.28. It went as low as 71.70, closed the day at 72. I'm still in this trade. My original stop loss on this was 75.66. I have now gone ahead and lowered my stop to 74.48. And if we can break below this 71.70 area, then I will probably bring my stop loss lower again, maybe over to like 73.50 or something. But for now, we're going to keep it at 74.48. And I hope this breaks under 71.70. And I think we could get a pretty interesting move down. So this is an open trade for me right now. Another open trade for me is Home, HOME. I got into the stock at $6.54. My original stop loss was $5.96. It got off to a really good start, but it couldn't really get going. Didn't really have too much momentum, but it had some nice comebacks because on Thursday, this thing started to like really go down, and then it made a nice comeback. So that was interesting. I have now gone ahead and raised my stop loss to $6.14, which is just above that entry candle's low. So 614 is now the stop, so that minimizes our risk on the trade. But hopefully this can get above 660, and then I think we should be able to get a nice move up over 660. But if not, we're not really going to lose on much on this trade. Another decent trade we had, not a big one in terms of winner, but it was a good one nonetheless, was CRSP. So we got into this stock at $56.02, right on this blue line where we got in. And then, a few days later, it had a news about the stock that, I don't know, some positive news. It gapped up to $61.11. And I sent out an email in the morning saying, hey, I actually sent out an email before it even did it, right? So, yeah, on this one, I didn't send out an email before the market opened. I sent it out like the night before. Hey, tomorrow morning, our stock is going to be gapping up. So let's tell it at the open. And I got out at the open on this stock, and I was able to get $60.50. I couldn't, unfortunately, get the high, which is 61.11, but I got 60.50, which is still a pretty good exit. So not a huge winner in terms of gain, but a nice gain nonetheless, because check it out. It's now actually back below our entry. And so that's the thing to keep in mind. So that was a nice trade we had. Another nice trade we had was Salt. Again, not a huge one in terms of winner, but still a pretty good trade. We bought this stock at $3.66. And it looked really, really good. And then next day, some news came in that the CEO also bought some call options on this stock. So the stock gapped up on that news. And I sent out an email saying, hey, it's gapping up. But again, sell the news, right? So sell the news rather than being a sucker and buying it on the gap up day. Let's sell it to the suckers who want to buy that day. And I sent out an email before the market even opened. We're going to take profit right at the open. And I sold it at the open, and that was a good exit. Locked in our gain on this one as well. So that was nice. And then, so again, we had a lot of decent sized winners. Another open trade for me that I'm still in right now is IHC. So this is the thin stock that I was talking about. We got in at 42.46. Our original stop loss was like 40.92. I have now raised my stop loss in this stock to 41.76, which is basically right under this candle's low. That's where I've gone ahead and raised the stop. And I'm hoping that it can one of these days get above 43. And I think it should continue to head higher on IHC. But the good news is we raised our stop loss, so we're not really going to lose much on this trade if it stops. But I think it looks great. Look at the weekly chart, right? Weekly chart on this stock for 2 years. Just think about this for a second, right? This is why you might understand why I was liking this stock. For 2 years, this stock couldn't go anywhere, right? For 2 years, 2018, 19, right? 2018, 2019, 2020. It's just going sideways. After like 2 years, it has finally broken that range, right? And it had another range, which is the breakout that we bought. So I think this looks really good to go higher. And you can take a look at it. The stocks overall. Look at the last time, right? Just look at this. Look at the last time it was in a 2-year consolidation. See that? It went from $14 to $40. This is another 2 years of consolidation. So this thing could technically go to 100, right? So that's one of the things I liked about it. I'm in it now. We'll see what happens. It is a thin stock, which makes it much harder to trade. and much harder to raise our stop loss and do our exits. But in this one, I've raised my stop, so we're not really going to lose much on it. And looking pretty good, Hope it can get back above 43, and if it gets back above 43, I think this trade should be off to the races. So this looks good on IHC, another trade that we're in right now. We also had a pretty good trade on Work, WORK, if you guys remember that one. Wow, this was a fantastic trade. Literally, bam, bam, it triggered and hit our target literally in one day, right? One day. So this is the one we bought over here. Again, this is a transition phase 1, phase 2 breakout, right? Phase 4 downtrend, phase 1 sideways trend. We bought the breakout of the sideways phase 1, and we got into this stock right over here, long right over there. Put our stop loss right there. Bam! Went from 23 to 28 in like one day. So that was an awesome trade for us as well. We made money on that. And now another trade that I'm currently in, half position off, is RAD. This is another trade I sent in the newsletter. We bought this stock at $13.50, and it went this day. It went crazy. It went to like 15.35, and I sold half my position at 15.13. Now I've raised my stop loss on the second half to under this candle's low at 14.02, and I'm going to hold on for 15.88. Right, 15.88 for my second half position, right? So only got half my shares left. Target's going to be 15.88, and I've raised my stop loss now to under Friday's low, and hope this thing continues higher as well on RAD. But looking good, cannot be losing trade anymore. Already sold half at a good profit and stops above our entry on the second half, so we can't lose on this RAD. So looks damn good. So again, some good trades going on here. Things are looking fantastic in the newsletter. And let's dive into some new trades I have for you. So again, I got a bunch of swing trades for you this week. But as always, don't be concerned because, most of these might not trigger. That's one thing to keep in mind. Because I don't send you trades like, oh, buy this tomorrow or buy these 10 stocks tomorrow. No, right? We have our entries. We have our triggers. Triggers are really important. So please, do not buy a stock before it actually triggers, right? A lot of, if a new person is watching the news, he might be tempted. Ooh, Anmol's gonna buy this stock at $13.50. I'm just gonna buy it right now at $12, right? But it's not the thing. Trigger is really important. As you can see, a lot of my stocks, the moment they trigger, bam, right? Volume comes in. Everybody starts buying it. Hedge funds start buying it. I start buying it, right? So the trigger is very important. So please don't buy it before I call it, before my trigger, because if it doesn't trigger, then the setup's no good and people are not going to be interested and the stock might continue to go down. So you might be tempted to say, Anmol's calling the stock at 32. Let me buy it at 31 before it even triggers. And when it triggers, then I'll make more money. But what if it never triggers? It goes down, right? So don't do that. Wait for the triggers. Triggers are really important. They're based on a strategy that I have. I've been using it for 10 years. So, I've been doing this for 10 years now. It's my 10th year. So I know a thing or two about what I'm doing. So you just got to trust me. All right. So just wait for the trigger. Okay. Triggers are key. Okay. Think about it. Why didn't, I called NBEV at 206. Why did it not move here at 2? Why did it not move here at 202? Why did it not move here at 205? Why did it not move here at 204? Why did it move only when it called it and got above 206, right? Work. Why did it not go at, 23 or 22, 23.50? Why did it not move at 23.40? Why did it move at 23.66 when I called it, right? Bam. So again, triggers important. You just got to trust the process, okay? All right, so now I got, again, a bunch of trades for you in the newsletter. I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I got 10 trades. Now, again, as always, not all of them are going to trigger. Just put your orders in your platform. Some trigger, some won't, okay? So let's start with the first one. This is not a new one. This is one that I've already called before, but I'm just calling it again, right? Because some people might have missed the newsletter. So this is ADPT, Adaptive Biotechnologies. I'm going to look to get into this stock if it gets above 32.40 with a stop loss at 30.77. Again, I'm seeing the stock was in a downtrend, now in a sideways trend. Gets above 32.40 will be a nice trigger for a breakout and might pop up into like 36-ish. So that's going to be ADPT. Next one is one that we've already traded before, CRWD. So this is a stock that we bought it long at like 64.80, and we raised our stop loss on it, and we got out for pretty much a break-even trade, tiny little profit. But the good thing is that the stock is not really going down. It's still holding nicely. So now I want to get back in this stock if it gets above 66.20. All right. So we'll look to buy it above 66.20, stop loss under these lows. And I think this could probably get into the $72 area. So that's what I'm looking to get into. Next one is again, a penny stock. It's a LQMT, Liquid Metal Technologies, LQMT. So I'm going to look to buy this stock right over here. Hold on one sec. All right, so LQMT. I'm going to look to buy this stock if it can get above here, right? Put my stop loss down into here, and then look for it to get up into the 15 cents area. So again, why am I buying it? You look at the stock here, just downtrend, going sideways. But then recently you can see here, it's not able to break below this 90-cent area. And you can also see that there seems to be some buying coming in. This stayed spiked up. There was some buying volume here. Look at this stayed spiked up. Got some nice volume here. So shows maybe a pattern of accumulation, maybe getting ready for a spike up. Now again, I don't think this stock is going anywhere as far as upside, but it does like to get these sort of spikes. So I think that if it can get back above this area right over here, it might want to head up into the 15 cents area, which is the next area of resistance zone. So that's a trade I'm going to be looking to do, LKMT. Next one I have is AVTR on the short side. So AVTR gap down on earnings. It's trying to go up. So now we have a little sell setup pattern here. I want to look to short this under Friday's low right over here. If it breaks it, stop over the high and look for perhaps a move down like this on AVTR. Another one I have is NWL, Newell Brands. It gapped down on earnings actually, right? So the earnings were actually a positive surprise, right? But the stock was actually gapping down. But after gapping down, it came all the way back up and actually closed pretty strong, right? So when you look at the weekly chart, it actually looks very interesting how you're in a phase 4 downtrend, phase 1 double bottom, and then now you have this little base above the moving averages on the weekly chart. So in my opinion, if it gets back above this support with our stop loss down into this territory, this thing does have room to head into the $25 to $26 zone. So that's what I'm looking to buy, NWL, on a little weekly type of breakout. The next one, believe it or not, is NBEV, which we already made money on, but I feel like getting back in it because, it just kind of got above that phase 1. And if it's going to enter into phase 2, then it could actually go to 315. Again, by the way, if you're getting confused, what the heck is Anmol talking about? Phase 1, phase 2. I'm not talking about biotech. I'm not talking about phase 1 trial, drug trial. I'm talking about, it's the way our PTS technical trading methodology is. So there are trends. There's phase 1 trends, phase 2, phase 3, phase 4. So you could really, even get into it early if you like. If you go on a 65-minute chart, you will see that NBEV has a 65-minute chart buy setup here, right? Moved up, pulled back. So if you really wanted to get in it early, you could get in it early at 220, all right, and see if it wants to go back up on a buy setup. But I always like to wait, for more confirmation for where more people are going to be buying. Because again, anytime you buy a stock, right, you need more people to buy after you for it to go up, right? So that's why the triggers I pick is where most people will be getting in, because then most amount of volume can come into the stock. So that's why, even though you could buy it early if you want, and I was actually tempted to do that, but I want to wait for more confirmation. So I actually want to buy when it takes out both these candle bodies. So I want to buy above 236, stop loss over here, and then see if it wants to head up into 3 or 350. So that's the trade I'm looking for on NBEV. Next one is ZAGG. This is one I had already called in the past, but it never triggered for us because I called it actually. I remember I had called it in the newsletter above like 850 or something right over here. But it went down and it took out the stop loss before it actually triggered. So I canceled it. And then I was watching it one day. It just came in from like $7 to like all the way up and triggered. And the next day, it actually gapped up. So then I just said, all right, we missed it. Let's just cancel it. But now what's interesting is on the 15-minute chart, after it got some more volume of, people buying this stock. And so I think something we might be onto something here. And you can see here that it's got this little trend. So I called it on Friday before the close. It never triggered for us. I'm actually going to change the trigger. So I called it, I think, 856 or something. So I'm going to change it actually. I want to now buy it at 840 and put my stop loss like all the way down there, and see if it can get into $10, because I really like the weekly chart. See the weekly chart, phase 4 downtrend, little double bottom, phase 1. And in my opinion, if this stock gets back above here, 840, it could probably go to $10, which is the 200 period moving average on the weekly time frame. So that's the ZAGG. Next one I got for you is CONN, ConAgra Brands. So you CONN, you check it out. It's been, again, in a straight downtrend, phase 4 downtrend here. And if you take a look at this stock, you see recently just got a nice green candle. They tried to go lower, went back up again. So after going down so much, it's stabilizing a little bit. So in my opinion, if it gets back above, this 994 area, the stop loss down here, it might actually want to head up into $12 or $13. That's also because recently, you can see here, this was our downtrend line on Con, which broke that downtrend. So it might be getting ready to maybe move a little bit higher on an uptrend. So that's the CONN. I like it. Another good thing about this stock, obviously, is that if you go on a higher time frame, like the monthly chart, you will notice where it's sitting, right? Always notice where a stock is sitting. It's sitting on a monthly chart support zone. So from there, we could get probably, a little bit bounce higher on CONN. So that's the thing, with a lot of my trades, because I get emails all the time, like, I'm more like, what the hell are you doing? Like, how are you picking these stocks? Or people say, I've taken PTS too, but I just can't, I can't see it, right? I can't find these trades, or I can't see what you're looking for. So whenever you cannot see what I'm looking for, I urge you to do one thing, and a lot of times it'll make sense. So anytime I call the trade, you're like, I don't see what Anmol's looking at. Well, firstly, you can just ask, right? Or firstly, you can just watch the newsletter to see what I'm looking for. But secondly, I can tell you, look at the higher time frames, because I think a lot of people look at just the daily chart and they don't look at anything else. So when you only look at the daily chart, you might not see what I see, right? But if you look at the weekly chart, monthly chart, 60-minute chart, then it might start making more sense. So, that's how I do my homework. I look at all time frames, and every trade that I take on a daily time frame usually has something else on the weekly or the monthly. So even though I'm calling this Con, I'm calling it why? It's sitting at monthly chart support, right? Remember that you did, what's that called? NBEV I called, right? So on the daily chart, I gave you the reason already, right? Phase 1, phase 4, phase 1, sideways, phase 2. But then you look at the monthly chart again and look at where NBEV was sitting. Do you guys see what I'm talking about now? See where NBEV was sitting? Right into support, right? So that's the little bounce spot there. And what else? And pick another trade. I don't know. RAD. So RAD, let's see what that looks like on a weekly chart, right? Look at that. I don't know if you guys can see it. Let me go ahead and delete these lines and zoom in a little bit so you can see it. So the setup on RAD, what does this look like to you on a weekly chart? Weekly buy setup as it's curling higher, right? In fact, even on a monthly chart, you'll be able to see this setup, right? Look at where it's there. Look at where it's sitting, right? Right into the support area and starting to get a move higher. I don't know, UFPI. This one didn't work out for us, but let's see what it looks like on the weekly time frame. Right, UFPI. So when I call it on daily, you might be like, I don't know what this sideways thing is, but you look at it on the weekly chart, and it was like a weekly chart buy setup, right? So higher time frames, once you look at it, a lot of the stuff that I do might start making more sense. But again, keep in mind, you will learn, right? Because that's why I tell people that, why are you paying for the newsletter monthly, right? So I don't know what you guys are paying, $97 a month or whatever you're paying to live traders, right? So $97 a month. But if you're gonna be in the newsletter, you might as well just sign up for it, or like yearly or lifetime, because we even have that. We even have lifetime newsletter packages. We even have 1-year newsletter packages. So don't just pay for it monthly. You can get a better price and better deal signing up for the lifetime or yearly or something like that. And then over time, since you see me trade throughout the year, you will see and learn along the way, right? So you'll see me perform the analysis every week, and that way you'll also learn, and you'll slowly start to develop your pattern recognition skills, and slowly things will start making sense. Because keep in mind, I've been doing this 10 years, right? So if you've been doing it for 3 years, 4 years, you still don't have those eyes just yet. And the only way it develops is by taking a look at somebody who's been doing it at a bigger level, right? And then learning from that. And that's how I learned from other people and other mentors. And that's how you should learn as well. So, in my opinion, if you're going to be in the newsletter, just get it lifetime or yearly and just stay with it, and then just watch every time. And, try to also come out with your own trades. Because again, following me is all great, but, I really want people to also start developing and learning, right? So develop, learn, and try and find your own trades, right? Let me know, hey, Anmol, here's a trade that I took based on the pattern that you've been talking about, right? Or here's a similar trade to this pattern that you called. Here's a similar one that I traded, because I want to see that. I love seeing that, because that shows that you guys are not only earning, but you're also learning. Because that's what the goal is for this newsletter. It's learn while you earn, right? So learn, meaning you're watching me, you're learning these setups, and earning, that you're following the trades, you're also earning, but then you're also doing your own trades, so you're also learning. So learning, earning, right? It all goes together. As they say, first you learn, and then you remove the L from learn, right? To earn. That's kind of corny, but it's true. So, that's the kind of way I want people to go about it. Because as our community grows, we're a lot of traders in this newsletter. Many people get this newsletter, as I talk about all the time. There's like hundreds and hundreds of retail people, retail traders that just follow along, and they don't really want to learn, and they don't really want to trade. That's fine, right? That's totally fine with me. Some people have a job, they don't want to learn, they already have a business or a job, they just want to follow. That's fine. We also have people who are full-time traders who are learning as well as earning, right? You have full-time traders who do their own trading, and they don't even follow all the trades of the newsletter. They just follow some of them. They use it as a scanner, right? They use it as a scanning tool, as a idea generation tool. And then there's also, surprisingly, this is something that I just found out, is that there's actually other education firms that have their own newsletter that also pay for our newsletter. Because, we can look at our PayPal account and see who's paying. So we saw a bunch of names, which are actually other trading education firms, because it says info at, blah, 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 trading.com. And I'm like, okay. So again, there's some people who run their own newsletters that also sign up for this, because again, it's all a big community. And as I said, there's also money management firms and hedge funds that also sign up to the newsletter. And that's why, a lot of the stocks that we get into, as soon as we get into them, they get a ton of volume, because a lot of people are looking to also trade them. So that's another thing to keep in mind. So that's why I want you to learn. I want you to learn is the key. So that's my goal. All right. So last two trades before I end the newsletter for today. CIM. So this one on the daily chart I really like. You look at it on the daily chart, gapped up on earnings, closed extremely strong. The next day we had an inside candle, but again really strong, and then another strong candle on Friday, and the highs are 22.50. So I want to buy this stock above 22.50, put my stop down here, and see how far it can go. Because what I like about this is that monthly chart. Look at the monthly chart. Boom, phase 4 downtrend, phase 1 sideways trend, and it actually just broke out from phase 1 into potentially phase 2. So this stock could be on fire for 2020. So I kind of really like this entry to get into this stock at over the highs. So this one looks really good to me. CIM. Next one is iRobot. iRobot, again, this stock on after earnings kind of gapped up, closed really strong, pulled back, had a sideways trend, and now looking like it wants to continue higher. So I want to buy this stock when it gets above here, put my stop loss down there and see if it wants to head up into the 200 period moving average around 65 or higher. Looks pretty good on IRBT. Again, you will notice a theme: phase 4 downtrend, phase 1 sideways, looking like it wants to get into phase 2. That's my bread and butter. People always tell me, Anmol, don't you get bored? Like, you trade the exact same stuff that's been going down, it's been downtrending, then it starts to go sideways for a little bit, and then you buy it when it starts going up. I'm like, what's wrong with that? Right? Good trading is boring trading, right? So I trade the same setups pretty much every single day. That's what I do for day trading. I have like 5 or 6 setups, and I just keep trading those every single day. Day trading, same thing. This is my favorite setup because it produces the quickest gains, right? Because when something's been dead sideways or down and suddenly starts going up, that's because, hedge funds and stuff, big firms, big traders like me, were putting in money behind that stock to take it to go higher. and just follow along, piggyback, right? Just if a horse, I don't know what's the analogy I'm looking for, but if a wave's going one way, you just go that way. You don't counter fight that wave, right? Because you're gonna get blown out. So just ride that wave, and that's the kind of thinking that I have. So that's the trades I want to leave you with. So again, 10 trades. We'll see what triggers. Keep an eye out on your emails. I would suggest you do one thing. Whatever email you use, right? Hotmail, Gmail, whatever Gmail, whatever you use, download that app for your email on your iPhone, Android, or tablet or whatever, or on your desktop. Download the app, set notifications, so that way anytime you get an email from me, you get a ding, it rings, it pops up on your phone, so that way you don't miss the alerts. Okay, and that's one way. The other thing is to pretty much every single trading broker out there, actually not even pretty much, every single broker these days has a mobile trading app. So you can download, excuse my cough, I'm just not feeling that well today, so I'm coughing throughout this newsletter. But you can download the Trading Brokers app on your iPhone and Android and, tablet and all of that, right? And once you download it, guess what? Even if you're working, even if you're out and about, even if you're driving, you get an email about the newsletter. I mean, if it just says raise your stop loss, or if it just says, something like a comment, then it's fine. Continue about your day. You don't need to take action because you can always raise your stop later, right? If you get an email like instant one, like, hey, I'm getting out of the stock right here. Guess what? If you have your app on your phone, even if you're at work, you can take 2 seconds, open up your phone app and just, open up your broker account and click, exit, and then you're done. So that's one way you can do that if you want to follow along. But that's that. But, I don't know what else to say. Markets are dynamic. Markets are ever changing. So, I can't really come out with a newsletter that just says buy it and sell it like there and there's nothing to do in between because things change. Sometimes stocks gap up and it doesn't make sense to hold on to it when you're getting a gap up in your favor. You got to take profit. So, you got to keep those things in mind. But as always, I'm going to continue to do what I do. But do send me feedback because I really want to make this. I mean, it already is. In my opinion, this is the best newsletter out there, right? Not saying it because of the results. Not saying it because of the winners, although that's what matters. I'm saying it because I think this is the best method, right? Because I'm not telling you like other places do, right? Other newsletters might say, hey, I just bought this stock. And then boom, after they buy it, then they tell their subscribers and then everybody starts buying it and the stock goes up. So the stock actually did not go up because of that person's analysis or because that person's a good trader. It only went up because everybody else was buying it after him, right? And you will notice never even once in the newsletter have I ever done, hey, I just bought this stock, now you guys go and buy it. Never. Right? I never send out alerts. I always give you triggers. If it gets above this price, then we're getting in. Here's our stop. Here's our target. I've done it every single time. So I'm actually getting in with you guys, right? So when you get slippage, I get slippage, right? Because I have my order and we're all getting in at the same time rather than, you guys chasing it, right? So in my opinion, this is the best newsletter out there. How can you help? I would say, send me feedback, send me suggestions on how we can make it better, right? How we can maybe make our emails better, how I can make the format of the news that you're getting in your emails, how I can make that better, how can I make the videos better for you, how can I make the spreadsheet much better for you? Like, send me all this feedback and suggestions. Again, constructive feedback, right? So send me that, and yeah, spread the word, Share it with your friends. Share it with your friends. Share it with your family because guess what? Anybody can follow along, right? So share that with people. Post your results, right? If you're on social media, on Twitter, Instagram, Facebook, tag me, right? Tag Live Traders. Post your results. Share it with the world. And, that will help you. You'll be motivated more and it'll help you keep yourself accountable as well. So again, on that note, have an awesome weekend, everybody. And I will see you guys next week. Keep in mind, Monday, the stock market is closed, all right? So Monday is President's Day. Stock market is closed. So you're not going to get any email from me. Market's going to be closed. Tuesday is when we'll resume again. Have an awesome weekend. Take care, guys.